Good morning, business owners. Mike Bosma, your business savvy CPA, coming to you from Studio B, that's Studio Bosma Business Center. Each and every week on Bosma on Business, we give you 60 minutes of something as a business owner that you just need to pay attention to. Today, no different. We're talking about all the different options you have to file your tax return if you're using either online software or free software, and talking about the status of the IRS. You can file on their website software and how that's going. Of course, what we try and do is give you some good content that as a business owner you just need to be aware of. And today's installment of Bosma on Business, kind of the second segment, we're going to do a deep dive into all of the various softwares. They're advertising like crazy right now. TurboTax, TaxSlayer, you name them. We'll go through the list. Pros and cons, the things we like and don't, if you're going to be doing your own taxes. And we're going to talk about the 3 different levels of professional firms that could prepare your taxes if you need somebody to help you. So that's the game plan. But of course, as a football fan, if you watched the Steelers versus the Ravens game last week, down to the final kick, and the kicker for the Ravens shanked it, missed his field goal, and the Ravens did not make the playoffs. So it's kind of all or nothing down to that last field goal. And I just thought it'd be fun to talk about, in this case, Tyler Loop, the kicker for the Ravens, and who he replaced, which was Justin Tucker. And, just some of the things going into that decision, because I think a lot of times in business, we are tricked into making a similar decision. So I'll just give you some background. First off, Justin Tucker, he was a Ravens kicker since 2012, so a long-term guy. Now, he was in the middle of a big contract. So for a kicker, he was over $5 million a year, so of compensation. So he had a very, very nice contract. And then the rookie, Tyler Loop, comes along. He was 6th-round draft pick and had success in college, and then in training camp was kicking the ball pretty well. So now, many of you will not know that Mr. Loop's contract was in total about $4.4 million, $1.1 million a year. So basically, the way that this thing works is the Ravens made an economic decision to save $4 million a year in their kicker position by hiring Mr. Loop. Whether or not that's a good decision or bad decision, I think those are the vagaries of, in football where you have a salary cap and you're trying to manage underneath the salary cap. You're like, hey, we can pick up all kinds of cap space if we go with the rookie. And a lot of these young whippersnappers coming out of college now can kick the ball, a mile, literally a mile. And it's just, remember back in the olden days when a 50-yard field goal was special? Now it's just routine, right? Now 60 plus is like, oh, well, now this could have some option or variability to it. But as we start off the new year, I wonder, as we're, one of the things we try and do, did last week's show, Brian Wheeler, we talked about planning, setting a goal for 2026. And, that process of attaining your goals. And of course, if you miss that, you can go to the kqh.com, the on-demand tab. I'd prefer you go to, if you're listening on this channel, just go to last week's and YouTube channel and listen and watch there. I think that was some entertaining and good content. Talking about setting a path for 2026, having a plan. And a lot of times as we start off, January of every year, we encourage our business owners to do a deep dive on how they spent money the year before, and obviously how you made money. But, this is the one time in the year where you're doing budgets and that kind of fun stuff. Do I need all this stuff? Let's really look at it. And I'd say The Great Game of Business, written by Jack Black. If you haven't read it, it's a must read for any business owner. Great Game of Business. Basically, the theme of that is, every single line item on your income statement and balance sheet, but primarily in this case, income statement, needs to have an owner. Somebody needs to own every line on your income statement. And in this case, Coach Harbaugh and the front office of the Ravens made a decision that, their somewhat embattled kicker, Justin Tucker, he had some allegations of, sexual something, don't know. And when they released Mr. Tucker, they said it was a football decision and nothing else, which means we save $4 million a year on our kicker position, right? So, and then you have to think about, as Jim Harbaugh is on the sidelines and as his team, the Ravens, who's really been a dominant force in the NFL for a significant amount of time. Now, the significant players on that team are thinking maybe our run is done here. So, which tells you who made the decision to cut Mr. Tucker and replace him with a brand new place kicker called Tyler Loop. And, and how much would that, the chance to you play 17 games in the NFL, it all comes down to one game, one kick, and you put it on the rookie who shanks it right. And you don't go to the playoffs. Your season is over. And, especially from that distance, should have been a chip shot. They're managing the clock well. So the question that I just want to pose to you as business owners is, when things get tough, what do you cut? When things get tough, what do you cut? I think a lot of times, like in this case, they said, this Tyler Loop can kick this in plenty fine. We don't have to worry about it. And they were wrong. When the chips are all the chips on the table, everything's all in for the season. Probably many in that organization, it was going to be their last game, right? Because the football life is a hard life, and many people are at the end of their playing career and going to go on to do different things. And so you play 17 games and you come to the end, and the rookie misses it, and then you are left to deal with the consequences. So as a business owner, my question to you is, when the chips get down, when things get tight, when things get skinny, what do you cut? And do you cut payroll like the Ravens did here? And what's the consequences of cutting the payroll? Now, and I will tell you, I think one of the mistakes people make is where, in fact, this happened years ago, 2007, right before the crap hit the fan. 2007, I was a senior manager at Grant Thornton. At that time, the fifth largest CPA firm on the planet, doing many things in the Reno office, and was having a good track. And I remember somebody said, we had a partner manager meeting there, and the phone was literally ringing off the hook. Back then, the way that you did practice development, business development, you take people to lunch, you wine and dine them, you find out where their problems are, you give them a solution, and then over time, no, I can trust you, and then they hire you. And I had a lot of success at Grant Thornton doing that. But then all of a sudden, it's so busy, you couldn't hire CPAs fast enough. And we were wondering, we were putting a lot of money into marketing. And people started questioning, why are we spending all this money on marketing? And I remember, and I was sitting in the room, they said, why do we need Bosma anymore? The phone's ringing off the hook. We don't need to do all this marketing stuff, spoken like true accountants. Now, I'm sitting in the room and I'm thinking, and then at the same time, Grant Thornton as a firm was saying, we only want to do large company work. So if it's not a Fortune 500, if it's not $100,000 a year, we're not interested. Now, it's funny. Now, that was almost 20 years ago. And today, when we quote a tax return, a base level business tax return, we quote about $2,500. Now, a base level individual tax return without a lot of complication, $1,500. So if you have a business and your individual return, all in, you're about $4,000, which is exactly what we're quoting back in 2007. That's how much technology has made the process of preparing tax returns, doing what we do, very efficient. What has not kept pace with technology in the CPA world is people being really smart about the more nuanced parts of tax land. And so that's really where, in Keystone CPAs, where we really differentiate ourselves, because we are the subject matter experts on many things that every business owner needs to know, like 401ks. I'll just give you an example. So if you have a business right now and you don't have a 401k, and if you're the business owner and you don't have a 401k, please, for the love of everything holy and good, don't pay yourself a salary. S corporation owner, just don't pay yourself a salary. Take his distribution. Later in the year, when you find out how your fortunes have gone, then throw in and decide if you're going to start paying yourself a salary. You have to pay yourself a reasonable salary as S corp owner. But the key is, if you have employees and you have a salary, you can't do elective deferrals if you don't have that 401k in place. So just kick the can on it down the road, see how the business scales. If you have a business without a 401k, I would just say you're probably not thinking of it clearly. Now, the different retirement options, you could do a simple IRA. I still put around $15,000 a year of elective deferral in 3% match, but the 401k is the holy grail, right? 23, 24, now 2026, $24,000 you can throw into it, or up to $31,000 and change if you're over 50. Now there's turbocharge, you get another $3,000 if you're over 60. So just be smart about it. Because I'll tell you what, I had a lot of people, listeners to this show, that reached out to me at the end of the year saying, hey, I need to do some of this, smart retirement plan. Well, case in point, I had a buddy, I've known him for a long time. He reached out, hey, I need some of that tax planning. I'm afraid I'm going to, pay everything I made in taxes. I said, okay, this is what we need to do. Get the 401k plan going, and we're going to max fund it. Just that alone would have saved him $20,000 in tax. Max funding is 401k. It ain't sexy, but it works. So we're going to do a bonus at the end of the year, max fund is 401k, and he had 2 part-time employees. And that made it so he couldn't do a solo 401k because they work more, one of them worked more than 1,000 hours. The other rule is if you have an employee that works more than 500 hours for the last 2 years, you can't, you can't do a mid-year 401k. Super bummed, right? It's like, had you called me earlier, had you asked the question, I could have helped you. So going back to our Ravens debacle, Tyler Loop. And do you cut? What do you cut? Do you cut the sales guy? Do you cut marketing when things get a little tight? And I think a lot of times as we're going through this strategic planning for 2026, setting a budget, if you don't have a budget for 2026 yet, just give us a call. It's not that difficult. It really isn't. But when you press into that budget line by line by line, you start questioning like, what is this stuff? Why are we paying this? When we do this for clients, you know how many duplicate expenses? Like, you don't have to cut your sales team. Just stop paying twice for the stuff you're already paying for, right? I mean, when I looked at that for my office building, I'm like, we have fiber. I'm like, why are we paying so much for fiber? It was an old contract, right? We still are paying for landlines, for phones, right? We don't have phones anymore. It's VoIP. So why don't we cut that? Oh, well, so you start questioning these things, and it saves thousands and tens of thousands of dollars for things that you don't want or need, just because you have to look in the detail. And if you don't want to be the one looking at the detail, I know a guy. We can help you out. So that's where, I guess, the monologue part of the show, this first segment, be smart. When you're cutting, be smart about what on my HOA, my San Diego condo, I looked at it like, why are we paying $400 a month for trash? There's really not many people there that often, right? Well, because back when everybody was there a lot, we needed it. Nobody ever thought to cut it back. Cut the trash bill. You'll save thousands. And then in the next segment, what we're going to do is tell you what to do with those thousands that you save. Because if you just save it here and spend it there, you haven't made anything, right? Last week's installment of Bosma on Business, we said the only way to grow wealth, spend less than you make over time. So this just gives you some answers and solutions. We come back, do these TurboTax ads. There's something that you need to do. Prepare your own tax return. Don't pay us to do it. You can do it. We come back. It's Bosma on Business.
What if you had some money waiting for you at the IRS? Money you could use to fix up the house, tune up the car, get a little something for the family, or save for a rainy day. If you worked and didn't make much money last year, find out about the Earned Income Tax Credit at irs.gov. It makes life a little easier.
Welcome back to Bosma on Business. Your host, Mike Bosma. One of the things that we try and do each and every podcast, each every Saturday, is to give you stuff, maybe some insight, expertise that really you couldn't get anywhere else. One of those things is now I'm watching this literal plethora of ads, for TurboTax and all these other tax softwares, promising, audit-proof, bulletproof, biggest refund, all these promises, blah, blah, blah. Just to give you some clarity, what the truth is versus what the non-truths are, or the hidden truths of these various software packages. So I guess let's start with TurboTax, probably the most common off-the-shelf tax software you can buy. And I would say, having done tax returns in TurboTax over the years and seen them done, if you do the input correctly, you get the right output. Isn't it right? Garbage in, garbage out. Good stuff in, good stuff out. If you get the input in correctly, TurboTax is going to be just fine, right? And, and I think, the genesis of why we do this show is to help people figure out how to make a buck or two, right? So do you need to pay a CPA to do your tax return, or do you just do it yourself? And I think a lot of that comes down to how complicated is your situation. It's no more complicated or simple than that. How complicated is your tax world? If all you have is a W-2, and hopefully a 1099 INT and a 1099 DIV. You could do your own taxes. In fact, before Trump, the Biden administration, they had, I thought, a pretty good idea to have these tax software providers allow you to do your taxes and use the IRS database, right? Think of it this way. The number one reason people get audited is because of mismatches with what the IRS has versus what you report on your tax return, right? Good way to get audited, people. If you're uncertain what's out there, in fact, I would say there's going to be a time in the not too distant future where before you file your tax return, it's going to get compared with what that IRS database already has, and you'll get errors back saying, hey, what about this or that? I forgot I have that Edward Jones account. It spends off a couple bucks a year of interest. Forgot all about it. Then the IRS says, how come you're not reporting the interest? You must be hiding other things, right? It's going to your address, where you lived 4 moves ago. You don't even remember you have the account, and it's got $12 in it. But now it's creating a matching problem, which becomes a problem for you and the IRS. Most people want to file their taxes correctly. They just need the number one way that people get audited, say it again, mismatches with what's reported to the IRS versus what you put on your tax return. So having that database available to you, in fact, you can do it. Go to irs.gov right now. Say, I want a transcript for everything that the IRS has. They will, number one, prove that you are who you say you are. You're going to need a prior tax return in front of you to be able to prove that you are who you say you are. But then they'll say, here, this is everything we got. It's like magic. Who doesn't do that? If you're doing your own taxes, make sure that you've captured all this stuff. As a professional tax preparer, we have Circular 230 that we subscribe to. We are bound by. That is the circular that the IRS tells us all the rules we have to follow. One of those is before I sign a tax return, I have to look at the prior tax return. Well, guess what? If you're doing your own, you may or may not be so inclined to look at last year's tax return. You're going to go off, well, I don't remember that. Fine. But, those brokered statements, those all roll year to year. And, and if you got a new one, you're probably going to remember it. It's the legacy stuff that's a problem. So if you're going to use TurboTax and you have a relatively simple tax return, then go ahead and do it. Now, if you're an engineer listening to this show, and you're probably, I think I love about engineers, it could be mechanical, electrical, civil, you name it. But engineers spend their life's work figuring things out. So figuring out the tax code is just something that they love to do. In fact, I had an engineer buddy of mine. He built power plants or nuclear power plants for Bechtel. Smart guy, right? And so he did his own tax returns on that. I looked at his tax return and I'd always use that as a baseline for the correct tax return. But there's all kinds of election stuff that he would never know, but he had a very complicated tax situation. So if you have a simple tax deal, go ahead and use TurboTax. It's fine. Now, the key is where people err using TurboTax is they don't keep a paper or electronic copy of that TurboTax file. And it's only kept for so long in TurboTax because, they say, well, you just go in, log in and get your tax return. That's true, I think, up to 6 years. If you can remember your login information and you can get your ID, and you have the same cell phone number and they can still, third party authenticate you. But, so what, there's if you're doing your own taxes, make sure that you have a copy of whatever you filed, not the draft, final version, whatever was filed and accepted with the IRS, that you have a paper copy of that, yes, a real paper copy, an electronic copy that is saved in Google Docs, Dropbox, something like that, and that you have every year. How long do you need to save those tax returns? Forever, right? Believe me. If you have a rental and the year that you placed information in service, you get audited, they're going to want to know, prove that the year it was placed in service. So you need all that stuff from all the way back when, forever on your tax returns to prove up the basis for what you did. Do a like-kind exchange. You need those tax returns forever to prove, the gain that you deferred into the current property. Otherwise, they're just going to tax you on the whole dang thing. That's how the IRS works. They're not your friend. Anyway, other things that are out there, I guess. You got H&R Block. So, and I would say H&R Block is a modest step up from TurboTax. Now, the H&R Block, you have to remember H&R Block, they will prepare your tax return. They will with humans, but those humans are not licensed to practice before the IRS. So, and it's an important distinction. And that is the only people that can represent you before the IRS are certified public accountants, CPAs, enrolled agents. Somebody has taken a specific test done, administrated by the IRS, and is tax-focused, tax-centric, or an attorney. Those are only 3 people that can represent you before the IRS. Anybody else, no matter what they say, I have this complete pain in my side right now who's saying, oh, his His dad was a CPA. He's not a CPA. And he's like asking about fees and all this stuff. And I'm like, dude, you know how I have to pay people what I have to pay them, and I need margin on it, or I'm not going to do the work. And he's just like, because he doesn't hire CPAs to do the work, he hires lay people. And so think of it this way: if you go to like the Jackson Hewitt kiosk in Walmart, right, and you see, oh, you got the Walmart clerk who takes off their smock and then walks into the Jackson Hewitt booth in Walmart to prepare your taxes. If it's complicated, you shouldn't be using them. That's the problem, right? And that's where a lot of times the people that are doing those services, they don't even know what complicated is or not. So that's where, if you need some help, it's just, is my world warranted to need a professional preparer? Then we can help guide you. And then when we come back in this next segment, I want to talk about the software, kind of how to make that work for you. Talk about non-credentialed tax return preparers. When we come back, I want to really kind of do a deeper dive into my world, CPA-dom. And not all CPAs are created equals, but you don't need high-powered CPA firms because, believe me, when I worked for Grant Thornton, they had a rate set that was significantly more than my current rate set as a local CPA. So what's the difference between a sole practitioner, local regional company, national company, how it relates to what you need and what you don't need? When we come back, it's Bosma on Business.
I was born with a congenital heart defect and almost died. But thanks to research funded by the American Heart Association, I had heart surgery that saved my life. Learn more at helpheart.org.
Welcome back to Bosma on Business. Your host, Mike Bosma. I was remiss when I was talking about kind of the people that need us most. Sometimes the show's generally unscripted, but obviously, if you're thinking of selling your business, those are the people that have the home runs, right? The grand slam. Because if you're in the window of 5 years of selling your business, all the things that we can do to help maximize the value of your business and get your business ready to sell and then sell your business. Let me say this. The process of selling your business, right? It's not hard to sell a business. It's not. There's more buyers by an order of magnitude than sellers. The problem is finding the right buyer and then getting the right price for you to get out of your business. And it's not just price, it's terms, right? What do you have to promise in order to exit your business and feel good about it? How much are you going to get paid on the front end and the back end? All these, it's like, I tell you, that really is our superpower. But the number one thing as we land this plane is, a lot of times people, they have the W-2 people, they want to hurry up and file their tax return so they get the refund. If you had a child that was born in 2025, you're a moron if you don't elect the Trump savings plan. I'm just saying. Now, it's going to take a minute for those forms to get spun up. I don't think they're available yet. The elections to elect a Trump account. So if you had a child born in 2025, the form isn't there yet, but what it's supposed to be is a simple checkbox saying, yeah, please set up a Trump account for me, put $1,000 in it. So if you file your tax return with a child born in 2025 without that checkbox because you want to get your refund, no bueno. Just hold it, sit on it. Just sit on it. Now, the other thing is, if you're expecting a big refund, this is the phrase that pays. My old producer, Samantha Stone, the phrase that pays. You get your refund. What do you do with it? What I'm gonna beg you to do is go right now to schwab.com and say open a new account and link your bank account to your Schwab account. You can do it all there on the Schwab portal and transfer that refund to your Schwab account. And then invest it in something generic like QQQ, which is NASDAQ. So you don't have to, and just set it and forget it. If I was looking at some metrics, if you'd invested in like the QQQ 10 years ago, I think the rate of return on that is 20% per year over the last 10 years. Know this is no promise you're going to get that in the future, but it's pretty good, whatever it is. And that's the thing. It's hard to save in, a little bit over a long period of time, although Dave Ramsey would absolutely say that's the way to go. But if you get a windfall, just save the windfall. Just do that, period. Just save the windfall. That's all you got to do. And then get that, when I started that Schwab account years ago, probably 5 years in, right? Same deal, right? I had a state tax refund that kind of came from nowhere when I was a partner in CLA. I'm like, just shove, because they did withholding. I paid the tax, but then it came back. I just started that Schwab account. Then, we liquidated our house before we leveled it. All the appliances, fixtures, all the rest of it. That was like $8,000. We got through that and threw that in there. Things got almost $100,000 in it now. So that's what, it's just the easiest hack is when you have these windfalls, just throw it in to the Schwab account. Okay. So that said, the Trump account. If the other thing that you need to do, if your child wasn't born in 2025, still opt for the Trump account and then fund it, right? So you think this is how this is going to go, guys, right? So you heard it here first. You're going to do your Trump account. You see the people, I turned 21, buy me a drink. Here's my Venmo. Now it's going to be, hey, my kid's turning 1. Here's his Trump account number. Just send the money to the Trump account, right? Because you can put in $5,000 a year into the thing. It's like a Roth. It grows tax-free, people. Hello, right? Imagine, even if it didn't grow anything, okay, you're going to have $90,000 at the end of 18 years. But with compounding over 18 years, you're going to have like $300,000. Your kid is going to have $300,000 just putting $5,000, and then have grandma and grandpa throw in theirs. It's just it's an aggregate, right? If you're an employer, $2,500 you can put into for your employees, right? You can say bonuses, doing bonuses. Every employee gets $2,500 into their kid's Trump account, right? Grows tax free, deductible, right? The holy grail, deductible by the employee or employer rather, not taxable to the employee, right? It's like your own Roth. It's better than the Roth. Less, you don't have to wait to 59 and a half to take the money out, right? So it's like your kids' own Roth that they can start funding their college. It's like better than a 529 plan. So anyway, if you need some help, the contact information is below. We'll send you a secure link to upload your information. We'll do the best we can in that hour console to make your tax magic happen, business magic happen at all. Of course, if you haven't already, just like and subscribe on Bosma on Business on YouTube, because we like to be liked. Until next week, my business brothers and sisters, keep that business engine humming. Call it Bosma on Business.